As you look at companies in the marketplace today, do you think more should be considering debt as an instrument to kind of ride out some of these times? Like there's a lot of companies that have shrunk their revenue profile or may not be growing as fast as they expected, may not be as profitable as they expected. And so where do you see debt playing a role in that type of a marketplace?
Yeah, we've seen a tremendous increase in not only the demand, but just awareness of debt as a solution. Private credit overall as a category is one of the fastest growing categories in private capital, but traditionally focused on traditional industries. So private credit within the tech industry is not as well understood, but it's a very, very big business. Most CFOs, most CEOs, boards, investors realize that debt can be a useful ally. Where things went a little bit sideways was during the whole SVB crisis. A lot of these companies, they viewed debt only as what they were going to get from their bank. Post SVB, a lot of the banks sort of retreated in terms of how much capital they're willing to provide to these companies. And also the VCs retreated. So that gap that we filled got a whole lot wider. Over my career, over 30 plus years, I've always seen banks as working capital and not necessarily growth capital. So for growth capital, you should be raising equity or more creative forms of debt or convertible debt that can provide that longer term growth capital. And that's where we're seeing the opportunity.